A late session sell-off saw equity markets sink into the close. While they didn't close on their lows for the session, they closed just off them. S&P 500 closing down over 30 points ahead of NVIDIA earnings. NASDAQ 100, after being the strength within this market, although it was mostly unchanged throughout the day, did end up sliding to finish down about 0.5%, just under 100 points lower for the NDX. The Russell lower by over 1%, the weakest on the session, and it basically held that title throughout the day. Treasury markets didn't budge from where they had been for the majority of the time throughout today's session as they continued to see yields go up ever so slightly, perhaps pressuring a little bit the Russell 2000. We're anxiously awaiting several earnings announcements throughout the afternoon. Joining us now for our closers panel to help break some of those as they come out are Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab, and Scott Durfey, Senior Manager of Trading Services for Charles Schwab. Scott, if you got any thoughts on the overall market as we wait for some news to break, be that from Salesforce, E.L.F, or SentinelOne, what did you make of that closing sell-off for the market?
Well, I think that we have had so much hype around what's happening today, specifically with the NVIDIA trade, that there's just so much pressure around that. I'm not sure if the, a little bit of softening towards the end of the day had anything to do with maybe an overzealous early on market, or if it was just a settling. So, I will tell you this, that the consumer, we know that the consumer confidence is high, and that will also translate to investors and traders in the market. And I think that may have had some early go today and then maybe just kind of evened itself out or corrected itself towards the end of the day, Alex.
Yeah, I would add as well that it probably had just a little bit to do with the fact that it was just a light volume day, guys. It was just one of those days where if a big trader came in, it was going to have an impact because there just wasn't a lot of activity. We got the first of our earnings bunch, though, that just hit the tape. We got numbers from Salesforce. Initial trade sees Salesforce shares higher by 4 or 5% in the initial jump. Looking at the numbers, what they provide, it looks like first quarter EPS, $2.58. Revenue, $9.83 billion. Looking at some of the other numbers from this, it looks like they provide guidance that is slightly above the expectation. Guys, I'm seeing quarter two revenue guidance, $10.11 billion to $10.16 billion. Estimate was closer to $10 billion for the midpoint, so certainly higher there. And therefore, the full year revenue is also a little bit better, 41 to 41.3. They had seen 40.5 to 40.9. Jeff, I'll give you the first crack here at CRM. Seemed like a really important quarter for them to at least hit the numbers. And it looks like they've done just that.
Oh, yeah, they absolutely had to hit the numbers. I mean, I think the guidance here is the reaction we're seeing. The expectation was about $9.74 billion. That's the slowest growth on record, and obviously a big deceleration from what we've seen with the double-digit growth over the last few years, including last year. This time, it was almost 11% growth on revenue. So investors are certainly happy to see them beat on revenue. Certainly happy to see that outlook coming a little bit better because right now we know they're trying to close deals. We know they're trying to get more people moved over to their platform. It's a very tough time to do that. And so investors are very happy to see this beat, I'm sure.
Yeah, Scott, it's an interesting time for Salesforce, a company that had such a strong market position in the business that it does, being best in class, constantly, playing offense with acquisitions, of course, announcing that Informatica deal this week, so perhaps getting back to its roots a little bit. But AI is disrupting this field. There's no doubt about that. They want to be a leader in the field still, but the question marks have started to come. They hadn't missed on revenue in like 10 years. They missed twice in the last year coming into this. So the fact that they didn't this time around, I think, is important. But what are you making of the initial jump here in shares? Do you think that feels warranted?
Well, I think it is actually, and I think you hit the nail right on the head. AI is not just important, but it's absolutely going to be the lifeblood, not just of this CRM company, but all other CRM companies coming down the pike. You know, this Einstein GPT that CRM has employed and is monetizing and is getting subscribers to. That's really going to be key. And so I'm going to be interested to kind of distill down and look at the numbers that are directly related to that Einstein GPT. But that's an extremely important part of it, Alex.
Jeff, I'll give you a last thought on Salesforce as we start to digest the E.L.F. beauty numbers as well. The stock a little bit lower, and there's a big reason why. But final thoughts on Salesforce?
Well, I think you guys just mentioned it, the AI services. We know that Agentforce launched back in September. They've kind of pushed away from the subscription-based revenue model. They're now allowing customers to kind of pay as they go with that Agentforce. We know in the prior earnings report, they had closed about 3,000 paid deals for that. There's still some question of how aggressive they're being on marketing, how aggressive they're being on discounted prices and free trials. And I think that that's what investors are going to be looking more for in the commentary, as well as this acquisition with Informatica and how that's going to really integrate, because they've had a problem with kind of long, drawn-out acquisitions in the past. So I think when we start hearing the company talk, we're going to see more reaction.
All right, guys. Scott Durfey, resident expert on all things beauty products. E.L.F. Beauty. Fourth quarter adjusted EPS is better than expected. Fourth quarter net sales better than expected. You're seeing this stock move lower because they announced a big deal. They are buying Rhode, which is, I believe, a makeup brand owned by Hailey Bieber, now potentially owned by E.L.F. Beauty, for $1 billion. So a huge deal for the company here. Scott, as you look at this, kind of a natural reaction, right? You announce a big acquisition. Naturally, the stocks typically have a little bit of downwards pressure on that.
Yeah, that is absolutely typical. You know what a company hopes for and anticipates seeing in a situation like this is the old one step forward, or one step back, two steps forward kind of idea, and that's what we'll have here. You know, E.L.F. obviously has had just a wonderful quarter. We'll see if they can continue to do that, but they will need to make Rhode, the company I'm not familiar with. So I'm glad you were able to provide some color around that for us, Alex. But we'll see how this goes. Obviously, they've done their due diligence. We'll see if it adds to the bottom line and potentially top line for E.L.F. going forward. But we'll see what happens.
Looks like we're getting a little bit more details here, Jeff, as well. Looks like it's going to be $800 million at closing. Fully committed debt financing will be $600 million. And the reason it's a $1 billion deal is that it does have an additional earnout consideration of $200 million. So you get that full billion by taking that 800 initial payment plus that earnout consideration of $200 million on this one. What do you make? I mean, I don't expect you maybe to have a big thought on whether or not this brand makes sense in the portfolio or not. If you do, feel free. But it looks like a company that's capitalizing on recent successes over the last few years. A company that's navigated, I think, new media really well in E.L.F. And it's buying a brand that I'm imagining has a pretty big following if it just sold for $1 billion. What are your thoughts?
Right. Well, it seems to have a celebrity connection, and certainly E.L.F.'s brand has been built on kind of going viral for a lot of reasons. You know, the cost of kind of duping these more expensive players out there. So I think it's certainly an interesting and worthwhile acquisition from that standpoint. There is a question mark around timing. I think right now, while the tariffs in China are paused for the time being, they have a lot of manufacturing exposure there. Over 80% of their products are manufactured in China. There's a lot of concern from investors around what that could mean for them long term. So a little bit of a weird time for them to do this, but at the same time, if it makes sense from an acquisition point, continues to help them gain market share, then I think it's certainly worthwhile.
It looks like they have decided to not provide guidance in lieu of sort of the tariff uncertainty as well. So that may be part of the reason you see the stock now taking another leg back towards the lows that it had recovered some from. Let's talk some SentinelOne though. Looking at the earnings numbers here, it does look like they're basically in line. This is about as in line of a report as we've seen. The stock reaction though is lower, and it does look like it might be on a little bit of softer guidance, at least on the revenue front. What I'm seeing is 2 cents adjusted EPS, 1.5 cents was the estimate. 229 for 229 million revenue is in line with the estimates as well. And it looks like, guys, Scott, it looks like the revenue, they are a little bit light from where they had seen it before on a forward-looking standpoint. They had seen 1.01 billion. They now see 996 million to 1 billion flat. So a slight haircut on the guidance, but despite that, they approve a $200 million share buyback program. So shareholder friendly, but maybe a little bit of a core business struggle. Any thoughts on SentinelOne?
Shareholders love those buybacks. You hit the nail on the head there. So, SentinelOne's, they're a good company. They've got a lot of things going for them. They are in a very competitive space. And so they will need to continue to keep things moving in this direction. A good quarter for them and a great place to continue to build from. So we'll see how they continue to do. Got a lot of confidence in this company.
Yeah, we will continue to monitor these names as they settle in. I got one final piece of news for you guys. Jeff, you can feel free to react before we say bye here. Tesla said to target robo-taxi launch in Austin on June 12th. So we're getting real tangible progress on some of these big projects. Not a surprise then to see Tesla shares up about $4 from where they closed. Only 1% though. Good first step, would you say, Jeff, as we work towards seeing this roll out perhaps nationwide eventually?
Yeah, it's a long time coming. I mean, this is exactly the type of thing that investors have been waiting for, looking forward to. At this point, they're not, we're not even, selling the news here because it's still an ongoing thing. But I think it's a great step in the right direction for Tesla, who's really struggled with the kind of the main car business. And so this could be big news for them.
All right, guys. Appreciate it. Jeff Pierce, Scott Durfey, always a pleasure.